It's a pretty cool experience, especially when you start realizing that you can do this consistently, and when you get that system set up, and it becomes like it's still difficult, but when you find a system and you're able to do that consistently, at least for me, it's a feeling of freedom. I can do it wherever and whenever. What's up, traders? Welcome to another trader interview here on the Fiverr's YouTube channel. Today, we're sitting down with Ellis, one of our funded traders here at the Fiverr's, to dive into his journey, his strategy, and what it really takes to become a consistently funded trader. And as always, if you do enjoy this interview and want to see more of them, don't forget to hit that like button and subscribe to the channel. It really helps us out and lets us bring you more content like this. All right, Ellis, welcome and thank you for doing the interview. How are you today?
Yeah, not doing too bad, thanks. How about you?
I'm great. I'm great. You know, as I said, a little bit tired today, but I think we're gonna get through this interview, and it's gonna be really, really great. I would love to ask you first. Maybe you could start by telling us a little bit about yourself and how you get started with trading.
Yeah, sure. So obviously my name's Ellis. I'm from the UK. I'm currently actually in Malaysia. So I'm sort of traveling and, getting some new experiences and whatnot. So yeah, currently here, sort of trading from abroad and working remotely as well. So I've been trading now for maybe 2.5, 3 years, funded for a year and a half now, I'd say. Obviously with other firms as well, the Fiverr's sort of more recently. And yeah, it's been an interesting journey. Like most, lost money at the beginning, realized the sort of benefits of prop firms, and eventually sort of made back all of the initial losses and more. So yeah, no, it's going well.
Nice. And you said you've been traveling around. I think that's a really good example of the freedom that trading provides, being able to use, you can trade from wherever you are and even on your phone. So I think that is, I don't recommend trading full time on your phone though, but you can definitely travel around the world and still be a consistently profitable trader. And I think that is one of the coolest thing with this career, really. So then that kind of leads me to the next question. What was it that initially drew you to the markets, to this trading industry?
Yeah, so it was just someone I knew was doing trading. They were trading signals and all of this. So he was making a bit of money from that. Obviously, he ended up losing it all. But that's sort of how I got into it, the initial sort of buzz of, oh, you can make money on your phone kind of thing. I've always sort of been involved in things, I guess. I've sort of had an e-commerce store for 5 years. So all of these sort of like side hustle type things, people call it, anything that sort of prevented getting a real job at the time. Eventually, obviously, things change, you get responsibilities, and yeah, you need to look elsewhere. But yeah, that's how I sort of got into it. So I was doing the signals for a little while and then realized they don't really work. So I joined a community and sort of built my strategy from that.
It sounds like you kind of came into this with sort of a entrepreneurial mindset, trying to, build up maybe multiple incomes and things like that. And I think that is a really good personality trait to have in trading, as we might be talking about in this interview. But you need to have that, that business mindset to be a good trader, because it's just you in the market, and you do need to kind of treat trading as your business. So would you say that you have that type of mindset, and how does that help you in trading?
Yeah, I think it's sort of the idea of you don't want to do something wrong for a long period of time, right? So the signals, I was only doing that for a few months. I realized it wasn't working, so what's the point of sticking with it? Obviously, doing your own analysis was the next sort of route you could go down. So I thought I'd give that a try. And if it doesn't work out, it's not for me and I'll move on. So yeah, just sort of trying to do things quickly, not rushing, not doing things, the wrong way, not trying to spend all of my money on accounts and get rich overnight or anything like that. Do things the right way, but also at the same time, just be cautious of what you're doing, I guess. So yeah, I do think it has helped me.
Yeah, definitely, to have that, have that consistent process, really. I would love to kind of maybe take a look at your Fiverr's dashboard, because you are funded. We can take a look at your account to see what it looks like.
In terms of payouts, that's the total so far. So this was my first payout, which was the biggest one. Again, these are all from the 60K account, and I think this might have been from the 70K. So yeah, this is sort of the journey so far, and hopefully it's not the end.
And I wanted to ask you, what That feeling when you first got funded. I mean, you first got funded, and especially that first payout. Could you, maybe describe that feeling for the first time? You're seeing the money in your bank account. You're actually making money. You're drawing a couple of lines on a chart. You're hitting a button, and all of a sudden you have money in your bank account.
Yeah, it's really strange. I know some people kind of comment on it as it's, the first one's really surreal and all of this. Genuinely, I don't think I had many emotions when the first one came through, reason being just because of especially the way I trade, right? So I'd be classed as an intraday cross swing trader type style, I'd say. I take 2 to 5 trades a month. I can be in trades for half an hour. I can be in trades for 2 days. It varies. So there's a lot of waiting around and a lot of patience that's involved from purchasing the first account to getting the payout. So it was I suppose it was more of a relief for me, if anything, of finally, after all of this, I've now got to the stage I want to be. Yeah, I'd probably, in long story short, that's the best way to describe it for me. Yeah.
All right. Yeah. I mean, it's a pretty cool experience, especially when you start realizing that you can do this consistently, and when you get that system set up, and it becomes like it's still difficult, but when you find a system and you're able to do that consistently, it's really, at least for me, it's a feeling of freedom. I can do it wherever and whenever, but yeah, it's a pretty amazing experience. I would like to ask you about your trading system, and maybe for that we could go into perhaps TradingView or MetaTrader or whatever platform you're using to do your analysis. Kind of, walk us through your trading strategy in a fairly simple way.
Yeah, so my trading strategy is very simple, I'd say. So I only look at 4 pairs. So I look at AU, I look at that during Asia and New York. And then during London and New York, I look at GU, EU, and USD CAD. So far this month, I've only taken 1 trade. That was on GBP USD. So I suppose I could kind of break that down. I'll just go to a different broker so that there's nothing on the charts. So I took this trade sort of the start of the month. So my way of trading, I go on the 4-hour plus, and I sort of use that as my kind of bias. It's the timeframes I use to sort of map out structure. So coming into this day, I could see that we had a bullish break of structure on the 4-hour. So I simply mark this up with my fib tool from the low to the high. And what I'm now looking for on the lower time frames, on the 15-minute and the 5-minute, is for price to react to a point of interest within a key sort of trading time. So again, for GU, it's during London or New York. So I want to see that change of character on a lower time frame during London or New York. What I then want to see is price yet to take a level of liquidity. So for me, my key levels of liquidity are previous daily high, previous daily low, and then session liquidities as well. I go by Asia as a whole, and then I go London and New York. So coming into this trade here, there are multiple POIs I could have looked at, but for me, I use 1 hour as well and 2 hour for POI. 4-hour plus is just for my structure. So what I saw here was a 1 hour point of interest, which was within a discount. So it's past 50%. So that's all good for me. Saw a lot of inducement here. So that was a nice sign. And then, yeah, if I go down to the 15-minute, what I saw here on the 15-minute was some bullish movement here during New York. If I go down to the 5-minute, I always like to use fractals just because it's always easier. We saw a clear sweep of this low with a body close as well, and then price reversed and broke this high here with imbalance. One thing I always like to look for is if I'm on the 5-minute, I feel like it can be quite a low time frame. So something that I back tested and I found works well for me is a 15-minute fair value gap. So waited for that. And then I simply got in on the retracement of this move, entering on the 61. And then my target was London high. So a bit like this. And that was that. So this is a good example of a trade that hits my take profit quite quickly. I'd say I'm normally in trades for a few hours at least. So this was quite nice to be in and out quickly. But yeah, this was the one I've taken this month.
Nice. Okay, that is a very clean setup. So basically, you're looking at the 4 hour, maybe the daily to get a sense of structure. Would you say when you're on those timeframes, would you say that you're looking for to trade in the overall trend, or are you just looking for like the levels on those charts?
Yeah, so for me, I'm not looking to trade with the trend. I just use the 4 hour just as a bit of structure. So for me, what I'm looking for here is I'm not looking for this 4 hour swing to hold. I'm not looking for price to now retest and come up and take out these highs. There's equal highs up here. There's every chance it could. But for me, I just want to see price bounce off a point of interest, bounce off a key level, and take out some liquidity. So for me, a 1 to 2 here is perfect. I always go for 1 to 2 minimum. If I can get more, I'll go for it if the target makes sense. But yeah, for me, this is all I want. I want almost like looking from a higher time frame point of view, like a bounce off a key level kind of thing. And for me, if price now takes this liquidity here and then reverses and comes back down and invalidates this swing, that's fine. It happens, but I've made my money, I've made my profit. And to be honest, I've got plenty of examples from my back testing where the swing actually isn't respected, but I can still profit and make money off a setup. So yeah, that's basically how I look at it.
Right. So you're looking for price to get into a high time frame level, or doesn't necessarily need to be a high time frame level, but it needs to be kind of like visible on the 4 hour and make sense on the 4 hour, and then you're looking for that initial reaction to the level and not a like high time frame follow through, right? So you're just looking for a smaller reaction and try to get some money. I like that. I think that is a really good approach where you're combining the higher timeframes and then you're trying to make some money on that first initial reaction without having to stay in the trade for too long. I really like that. You mentioned something about fractals. Why use fractals? You said it's easier, and what do you mean by that?
Yeah, I just visually, when I look at the charts, I kind of like having them quite plain initially, and then when it comes to actually analyzing properly, I just like to use them just to clearly map out clear highs, swing lows. So looking at this on the 15-minute, I know some people would look at this as a low. For me, it needs to align with a fractal. And I think the way fractals work, you need 3 candles, you need the middle candle to then have 2 candles either side of it to make it a true swing low, basically. So rather than just figuring it out myself, sometimes I just have them on, and for me it just makes it easier to visualize. So as soon as I saw this movement down here, it was clear that we'd taken out a swing low and that this was the swing high, that if I wanted to get into a buy setup, I would have need to see this being broken. So I mean, you don't need to have fractals. I just like to use them, to be honest. They don't really benefit me an awful lot, but yeah.
I think it's a great idea, fractal. I mean, like you said, it depends on what fractal. Maybe this is the Williams fractal, but I think it makes a lot of sense, from a technical point of view, because if you have a low and then the two candles on either side, it's higher than that one, then obviously that is a high probability of being a swing point. And as you can see here on the chart, most of the fractals here are showing a low time frame swing point. So I think that makes a lot of sense. Are you using market orders or limit orders? I would guess that the trade that we're looking at here is a limit order on that, like that retest of that low time frame breakout area, right? Or is it a market?
Yeah, so it all depends on context, right? So I'd say majority of my trades are limit order. In this instance, I'm trading on funded accounts. I'm trading on the fivers, and at 3 o'clock on Tuesday, the 3rd of June, there was high impact news right on the release. So I had to wait 2 minutes after the high impact news. Now, if I go down to the 5-minute, it might be clearer. So you can sort of see that my entry was tagged on the news at 3 o'clock. So I then had to wait until 2 minutes after. Luckily, price was around this level. I think I actually got in a better level because I think I made 2.9 or something like that.
Nice.
So I actually got in this trade with market execution. Now, the other thing I do is I'd class this trade as a high probability trade. So for me, a high probability trade is a trade where the body sweep, the sweep of the swing low, in this case, when it's swept by a body, as it is here on the 5-minute, that for me is a high probability trade. If it wicked this level and then broke up, I'd still look to take the trade, but with reduced risk. So because I don't trade a lot, I always sort of risk 1% per setup. So in this instance, what I did, as it was high probability, I risk 2%. And then on low probability setups, I risk 1%. So on this trade, I actually made, would that be 5.8% if my maths is correct? Yeah, 5.8%. So yeah, just risking 2%. And then that's me done for this month so far. I haven't seen any other opportunities, but I'd take that all day. So yeah.
Yeah, and I would say it's a beautiful setup. I think a lot of different people trading different systems would have kind of looked at this setup as I mean, I personally, I would probably have taken this trade as well if I was actively looking at the chart at this time. Let's talk about stop loss placement, because I do see that you don't have the stop loss below the swing point. You have it like slightly higher. So what's your reasoning here behind the stop loss placement?
Well, I don't know if it shows it here. No, I always try and have my stop loss on the swing low or the swing high. I mean, I see some people do this to account, if price liquidates this and then obviously goes in the direction. For me, I go by the basis of, if I'm wrong, I'm wrong. If this low is taken, then that means this 5-minute swing is invalid. So what's the point in being in the trade anymore, kind of thing. Also, just from back testing as well, like, I mean, I've back tested 2-3 years on this, and there's probably a handful of setups where price will wick this and then go in your direction. It makes no sense from a risk to reward perspective of doing this for every trade. And also then comes the issue of, well, how far do you put it? Like, you could put it here and you still get wicked out here and then price goes. So for me, it just makes sense to go with structure and then have my limit on the 61 for risk to reward reasons. And also for me, when price hits the 61 and then goes up and takes out the swing high in this instance on the 5-minute, that to me is a sign that that swing has been respected and price is now continuing in its direction. So yeah, that's sort of the rules I go by.
Yeah, that does make a lot of sense. Take profit. I think you said here on this trade that you took profit on the London high, if I'm not mistaken. Are you always looking at the London high? Are you using any other types of concepts for taking profits?
Yeah, so it can get complicated explaining it, but I understand it with my eyes. But in an instance like this, I had the swing formed during London. So the liquidity that we need the swing formed during New York. So the liquidity that we need to take is the London liquidity. Had this as setup taken place during London, then I'd be targeting Asian liquidity. Now, there's instances where setups play out during Asia, but for me, because I'm now risking 2% on high probability setups, it doesn't make sense to do that. And also I'm trading 4 pairs, so I'm comfortable with sitting on my hands and not trading during times where, it's not worth it. So yeah, the where I take profit always depends on timings, when the setup is formed. Now, sometimes what we'll get is a swing form in the opposite direction. So in this case, we didn't. For me, I always class a swing as, obviously, you've got your QMLs for reversals, and then you've got your QMLs, retest, break of structure, and that would be your break of structure. In this instance, we had a QML where we've got this high, which gets liquidated and taken, and we've got this low. Now it gets broken by wicks, and then it also breaks here through with a body. But for me, a swing always needs to be broken with imbalance for it to have any reliability. Again, this is just something I've found from backtesting. So sometimes I will draw up the opposing swing, and if it makes sense, I will target just the discount. So say, for example, in this instance, we had a bearish 1 hour swing. I'd just target the 50%, or anywhere that made sense within discount for risk to reward purposes. And as soon as it hits the 50%, I'd either take my profit or set the trade to stop loss. So yeah, normally I am targeting session liquidity because I find it works really well, but there's instances where I will target a swing.
All right, that makes a lot of sense, and it's a very detailed explanation. So I think the viewers are now getting a very good insight into your technical system here. Now, let's change subject here a little bit. Let's talk about the psychological challenges that you might have faced in trading. So what do you think are the, the biggest psychological challenge that you have faced in your trading journey?
Yeah, I think the biggest issues is having to be reliant on money from trading. So I was trading or learning to trade during university. Now I was in a position where I didn't have to be reliant on trading income to pay bills. I didn't have to be reliant on that. I then finished university. I worked remotely, which is a big benefit when it comes to obviously wanting to trade as well. So I worked remotely. And again, I was getting paid. I wasn't reliant on trading, and then moved to another place, again, working remotely, wasn't reliant on trading. So I never had pressure to make money from trading. It was just something that I realized I could do and wanted to do. I think the biggest psychological sort of issues I've maybe faced with this is the strategy itself, right? From back testing, the results are great. Live testing, the results are brilliant as well. Having payouts and all of this is brilliant, but it does require you to sit on your hands. This month, this was the only trade I've taken, as I've said, 3rd of June. It's now, I don't know what the date is. What was it, 18th or something like that? So it's now 2 weeks later, I haven't taken a trade. From my back testing last year, so I had a 10% month, a 6% month, and an 8% month. That's from back testing with the applied added position for high probability trades. It was actually 5%, 3%, and 4% from live trading. So still very good months. But after that, I didn't have any trades for 2 months. So, there's swings and roundabouts but if you can sit on your hands and you're going to be paid eventually, for me, that's fine. And I think having that job or having that stability, that stable income on the side is just a massive benefit. So yeah.
Yeah, I think that is, the next question was, what's one piece of advice that you could give to traders who are just starting out? And I think that kind of ties into what we talked about here, because I do see a lot of people saying that, I want to quit my job and become a full-time trader. Every professional trader, full-time traders that I've talked to says, don't quit your job. It's like, don't quit your job. Keep that job as long as you can, because the pressure to perform in trading is massive. What if you have 2 or 3 losing months? Like, where's that income going to come from? And when you have very good payouts, you can't really spend that because you need to save up for the months that you're not making any money. And there's going to be a lot of months when you're not making any money. But maybe, do you have any other piece of advice that would you give to new traders watching this and they're just starting out?
Again, it goes along the lines of what I've just said, but if you're a new trader and you're serious about it, think about your career path, I suppose, and what it is you wanted to do. And if you can, work remotely. Like, I know I've sort of spoke about it there, but if I wasn't to work remotely, I probably wouldn't be able to trade the way I trade, because I trade on market opens, I trade during key times. Like, if you've got an in-person job, you likely can't do that. If you haven't got, a job that facilitates you being able to do that, you can't. I know scalpers. How are you going to scalp if you're, working full-time 9 to 5? That being said, if you are in a job and you're in an in-person job, I wouldn't discourage people from quitting and going all in on trading. Like, it's pointless. You're probably not going to make it. Just, if you're in that position, find a strategy that works for you and works around, your working hours and everything. So, but if you're in a position where, maybe you're young, you're now going into the working world, try and get something that's remote so it lets you do this as well. So yeah, that would be my advice.
Definitely. I think that's a really, really good advice. All right. We've, got to know quite a lot about your trading system here in your breakdown. It was really good doing this interview with you, Ellis, and I would like to thank you for doing the interview here today. And for everyone watching, make sure that you do hit that like and subscribe if you want to see more interviews like this one. And I'm pretty sure that we're going to see more of Ellis in the very near future. So if you do have any questions for him, let me know in the comments, and we'll make sure to get all of those sorted. All right, Ellis, thank you for joining.
Thanks for your time. See you later.
Take care, man. Bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at the Fivers. We'll see you in the next one.